Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. Between the OTC, New York Stock Exchange, and NASDAQ, there are over 22,000 companies traded publicly. I feel that small businesses are the backbone of America. The number one reason for this channel is to help small companies gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, CEO Kang from Widepoint Corporation, ticker symbol WYY. Jin and Widepoint provide secure identity and access management, secure analytics, and IT as a service. Jin has done a wonderful job of turning this company around, but I will let him tell you more about that in just a moment. It's important for you to understand that this is not a paid-for promotion. I do not collect compensation for the interviews I do here. I do look for companies that could potentially provide an above-average return on investment, but that is not the primary reason for the channel. There's a thing called impact investing. It's tied to environmental, social, and governance. By helping a small company become a large corporation, if you and I can become ambassadors of a product because the values of that company align with our own, think of all the jobs that will be created as that small company becomes a big company. Think about the community that that company is in. Typically, they thrive along with the company. This channel is to help companies that are relatively unknown become known so that they can build a following and they can have brand ambassadors that share their vision, share their mission, and are willing to do what they can to help have a positive impact on humanity. That's what this channel is all about. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, you speak to a financial advisor and do your own due diligence. All right. Hey, everybody. Tim from Alpha Wolf Capital coming to you live with Kang, one of my favorite CEOs of who has been, has done I think a phenomenal job of turning around Widepoint, which is ticker symbol WYY, and right now you just reported second quarter numbers, which were impressive, right? You from the time that you became part of WYY, it has not been an easy road for you. The company, just to remind everybody, literally was on the verge of potentially going under. Had a boatload of debt, was just not in good shape. You and your team turned that whole story around and have secured an amazing amount of business. You handled the consensus or the census flawlessly through a pandemic. Right?
Yeah,
absolutely. Lots of amazing things. You did an acquisition that you were predicting that it would be accretive sooner than it was. But it's accretive nonetheless as we speak today, right? And getting
it took
better.
A little longer, but we got there.
You got there? And you got there through a very challenging business environment, I would say. Right?
Absolutely. Again, Tim, thank you for having me on. And you're absolutely right. We had a tough road to hoe, coming in 2017. We had a mountain of debt. We were maybe, a month, a quarter out of, being flushed down the toilet, insolvency. And then we turned it all around. and got the, earnings per share positive, and COVID hit, and, we had to retrench. And now we're, a couple years past COVID, and our customers are, re-engaging, and they need our services more because, everybody's working from remote locations, and they need to secure and manage and have visibility into their mobility assets. We had a great second quarter, right? We have now 3 consecutive quarters of positive cash flow. We're doing what we said we were going to do. We were going to make this business a viable business and growing business and healthy business and profitable business, and we are there now. For the second quarter highlights, I mean, we were awarded $254 million in contract modification for the Department of Homeland Security, our flagship, contract. We had hit the cap on that contract, which is a $500 million contract. And DHS had to hold back, the task order awards because they didn't have any room in the cap anymore. And so now that, they've issued this modification, they're starting to issue new task orders, and you should see that in the second half of this year. We were selected by the U.S. Navy for the Spiral 4 contract, which is a $2.7 billion contract, right? And we were awarded with, 3 of the major wireless carriers. That's AT&T, Verizon, and T-Mobile, and I can name them because we're coming after their business, right? But no, I think the services that they offer and the services that we offer are completely different, right? And so we have a differentiated set of services. We manage and audit their invoices and such. We help make sure that the inventory is clean, the invoices are correct for our customers. AT&T can't do that for Verizon invoices because that would be a conflict of interest.
A little bit of a conflict of interest there.
Yeah. So we're in a very good position because we can offer those services to the Navy. In terms of our new technology that we have tested and put into service is our mobile anchor digital credential. And essentially what that is that we are now moving away from this form factor, the card form factor, to the mobile device form factor. We're issuing the most secure identity and access management solution onto these mobile devices. And in our post-COVID environment is that much more important. And make sure that those devices are secure and you're managing those devices and you have visibility into how those devices are used, right? In terms of our EBITDA, we're now 28 consecutive quarters of adjusted EBITDA positive from 2017 till now, right? We had 3rd consecutive quarter of ending cash flow positive, 3 sequential quarters now of free cash flow positive. We had continuing sequential quarter over quarter and year over year improvements, right? Revenues for second quarter was $36 million, a 35% increase from the same quarter last year. Adjusted EBITDA, $811,000, a 479% improvement from the same quarter last year. Gross margins are up. Net loss decreased, right? From, we lost $500,000, $500,000 on a fully diluted basis, but we had lost 800, almost $1 million last quarter. So net losses are, continuing to narrow. Again, free cash flow was $800,000 this quarter, just this quarter alone, right? And so we're at $1.4 million in free cash flow for the first half of this year, right? 6-month revenue, $70.2 million, a 35 increase in top line, from the same quarter, same half last year, right? Adjusted EBITDA was $1.4 million. Gross margins are improving again. Net loss decreased. Free cash flow, $1.4 million. I mean, you look at all of the numbers and you look at all of the contract activity and the customer acquisition, we are in a great place. Second half, I mean, if you just, we're trending toward the higher end of our guidance range. If you just look at our first half numbers and you just double that, and you can see that potentially we could outperform our guidance. And, we'll look at what our third quarter numbers are starting to look like, and perhaps we need to re-guide. If we need to, we'll do that. But we're in a, fantastic place. We have a great sales pipeline. We have 320 million in contract backlog over the next 2-3 years. Building our business. And now that, our boat is now solid and stable and going in the right direction, we need to start looking around for inorganic growth, because our organic growth strategy is, working well, and we are doing all of the things that we said we were going to do. Now it's time to look at potentially, doing some business combination, acquiring a business that is going to, like stair step up to the, the $200 million range kind of thing, over the 200. Getting to 100 million was a task, and being profitable were the two primary objectives. And now that we're there, it's not a huge stretch of the imagination to get to that next level of 200, maybe $250 million in, revenue.
So, I mean, that was an awful lot to absorb.
Yeah. Sorry.
No. I mean,
Look, good news though.
It's right. It's all good news. I can feel your excitement, and look, I told you before we started recording that there are just there are some guys that I just want to win because I think they deserve it. And Jen, you are one of those guys. I mean, you came into a real crappy situation, you turned it around. And then when things were starting to really look promising, COVID does the double hit you in the face, right?
Yeah.
But you're still, even through COVID and all that, you're 10 times the company that it was, right?
Yes.
When you came in, and the stock was just getting annihilated. You were stronger than you were, without question, right?
Yeah. Yeah.
You were trading at price levels below when it was on the steps of the bankruptcy, right?
Yeah, absolutely.
Has never made sense to me. And you're one of those guys, but you stuck with it. You continue to say, look, we're going to execute, we're going to get there. It's just taking a little bit longer and guess what? That's exactly where you're at today.
Yeah,
right?
Exactly. Yeah. I mean, in 2017, I think we were at something like $65-70 million in revenue, and we're courting, 130, 140, right? And so pretty good. And we're going to be, as I said, we are cash flow positive. Our objective is to get to earnings per share positive for the fourth quarter and for the full year 2025. And so, we had a lot of adversities, right? I mean, just to name one, the major pandemic, but that's okay. I mean, we know how to operate the business. Our team, we have a great team. We know how to grow the business. We know how to operate the business profitably. And, we're not, circling the drain anymore. I mean, as I started off, we were, circling the drain. We were maybe a month, maybe a quarter out of insolvency and bankruptcy, and they were going to chop us up for sale. And the directors, the former directors, and a lot of our investors were like, yeah, let's not go through this bankruptcy. Let's find an acquirer and sell the business, right? And here we are, 6-7 years later, we're generating cash. We are going to go out and do some acquisitions. We did an acquisition, with cash generated from operations. I mean, that's all good.
I want to emphasize to people listening that so the acquisition that you had done that has taken longer to become accretive. I mean, that was a very challenging time. You had the pandemic, right? You had the fastest interest rate hike cycle in history. You had supply chain issues, the biggest supply chain issues in the history of mankind. There were a lot of challenges, right?
Yeah.
But tell everybody where you are with that acquisition as of today.
Yeah. So when we did the acquisition, again, it was a very tough environment. The business was a very solid business, and we knew that we could make it profitable. But because of COVID, customer just kind of disengaged with us. And so what happened is that, the business that was built to, be profitable and continue to grow, we couldn't land any new customers under that business. And so what we have to do is to go back and we have to cut costs as best we can. And now we made that enterprise profitable, and it's added $10 million to our top line, profitable revenue to our top line. And now it's starting to show signs in the commercial sector to growing that business. So we have a huge pipeline, and we closed several deals under the ITA umbrella, the IT as a service, our solution set. And now what we're doing is selling into their customers as well. And so we should see continue improvements in ITA acquisition, what we call our IT as a service acquisition. And so it's gotten to the point where all of our business units, all of our solutions are growing, and we have a healthy pipeline. We, the contract announcements that we had in the second quarter, first and the second quarter, they're contract awards from all for our identity and access management, our cybersecurity, our managed mobility, our IT as a service, our digital billing and unified communication. All of the awards in those press releases were awards from all of our business solutions, right? And so and we have more to go. There's a lot of opportunities in our sales pipeline that we will be putting out press releases. I look forward to putting those things out. We just need to be very careful about not naming names because we have non-disclosure with our customers. But you should see more press releases coming in the second half, and you should see our cash position improve. ITA is adding, as I said, $10 million in profitable revenues, and they'll be adding more soon. And so
if anybody is concerned about the thoughts of you going out, and I guess here's where I wanted to go with this, of you going out and doing another acquisition. You and I, before we hopped on, had a conversation about the path of what probably is an easier path.
Sure.
Which is looking at privately held companies as opposed to publicly traded companies.
Yes.
And it makes a lot of sense. What you say makes an awful lot of sense. And I'm sure there's some real opportunity out there, right?
Yeah. Yes, there are. Yeah. And so we're relying on our network of CEOs, former CEOs, chairman of the board, these private companies. And as you say, Tim, you're absolutely right in that, acquiring a private company is a lot easier in my opinion, and it's a lot cleaner because you could see, where they're headed. You can know a private company is going to go out of business or not go out of business. That their access to capital is limited. So if it's a small company, a medium-sized company that is running the business at a loss, they're going to go out of business, right? Public company, on the other hand, is a little harder animal to skin, right? Because you look at it, they have access to capital. There's ways of couching
all of good capital, but they have access to it.
Right, they have access to it, right? And there's a lot more players. It's not a matter of sitting down with the CEO and saying, hey, where do you think that we should take this deal? With a private company, you can have those kind of conversations. With a public company, you have to look at, engaging a bank, doing a fairness opinion, making sure that all of the major shareholders are on board. There's a lot more moving parts. And so as we look around for the opportunities, we are looking for companies that will add to our customer base as well as our capabilities and, vertical and horizontal integration. But we're leaning towards more of the private companies for acquisition targets, because as I said, I think the amount of time and effort and the number of moving parts is less than a public company.
Plus, I'm just thinking out loud here, but you can use your stock as currency, right?
Absolutely.
That gives the owner or founder of the company
Yeah. Yeah.
maybe some new a second shot, so to speak,
Yeah.
at hitting.
Second bite at that apple, right? So,
Right.
you do the acquisition with the cash and warrants, and a simple, way to look at it is when you purchase a company, you should see your stock improve, right? Stock price improve. And so, by exercising those options or warrants and buying the shares, you should see the strike price pre-merger and the resulting stock price after the merger. You should see an appreciation there, and so that gives them a second bite at the apple. And then you look at perhaps a third bite at the apple. I mean, as we get to 250, 500 million, or maybe $1 billion company, there's going to be these large, mega, size companies that are going to look at us and they're going to, gosh, we could really use a $500 million in revenue, profitable revenue. We could use $1 billion revenue. And so now that gives them a third bite at the apple, right? And so there's a lot of opportunities. I think we're, as a public company, as a public, solid, profitable company, um, we're in a very good position. We're in the catbird seat to be able to go
Oh,
out and do some acquisitions.
Jed, it makes me so happy because you are. I mean, even this current environment that we are in, which is a lot of uncertainty with the election and the wars, potential wars all over the place. Um, even in that, you
Yeah.
are, small micro cap
Yeah,
company.
we've been around, right? I mean, even in this, turbulent world, they still need to have their mobile device, their smart devices. They need to be able to manage them and have visibility into those devices, right? And so, that's a testament to the sector we're in, right? Even with all of this craziness that's happening, they still need our services. It's
Yeah,
a critical service. Even, we're going into this now, the new election cycle, and there's a potential, administration, regardless, there's going to be an administration change. It's going to go from either Biden to Trump or Biden to Kamala Harris, right? And so there's going to be administration change, but I think our business is continuing to, we're going to continue to grow because they all need securing these devices, managing these devices, and having visibility into these mobile devices, right? I mean, that's a critical service.
your card. I guess the one thing that maybe is a little concerning to me, and I don't know,
Mm-hmm.
maybe you could put me at ease.
Mm-hmm.
But we just had one of the biggest data breaches again, right?
Yes.
Through electronic. And I think one of the things that I used to feel comfortable about you and your service was the fact that you did have this card that
Mm-hmm.
wasn't just all 100% digital, right?
Correct. Correct. It's not 100% digital. It's a multi-factor authentication, right? So you have to have, something that something that you have, right? And then something that you could be store your fingerprint onto those things as well, right? And
Yeah,
so it's a multi-factor authentication. It's a solution that hasn't been hacked, and it's implemented in all of the federal government agencies, right? And as long as you control who get these cards, you can essentially eliminate 100% of all of the hacks that comes through. Now, if you have somebody that's it and given these credentials and they use it for untoward purposes, there's not a whole lot you can do other than through behavioral algorithms and AI, and we're looking into that as well to be able to provide that. But in the case of like Manning or who Snowden, these folks, they had access to the data. And so if somebody, it's an inside job like that, there are ways to do that, but our solution doesn't resolve that problem. But however, if somebody is compromising your data, who's compromising your data, and you can shut them down right away, right? And so by having 100% identification of the people that are coming onto your network, you can eliminate essentially 100% of all cyber hacks. Now, what we're doing is we're taking that and we're putting it we've already put it onto these mobile devices now, and we have it rolled out to one of our customers, soon to be two customers, and it's going to put the strengths of these credentials onto these mobile devices. And so you won't need to have both of these. You only need to have one, and you'll have, be able to, access all of your IT infrastructure, whether it's physical or logical. You can wave your phone in front of your, door opener. You can open it. You can use it to answer your emails. You can get access to your corporate database. All of those things, you could do that now with a single device, and it will provide you the strongest, most secure multi-factor authentication solution available on the market today, right? And so you hear about all these breaches, and a lot of these breaches happen because somebody get caught in a scam where they end up, get a keylogger onto their system, and they push in their user ID and passwords, and then you have to wait for these numbers. That's all of these solutions have been breached. With this, you don't have to have any of that. Essentially, what you do is you present your certificate that is on the device, and you log in and you move on. You unlock the device using your fingerprint, and you just move on after that. You don't have to wait for the numbers, and the password isn't sent anywhere. It's all on your device, and so it's really difficult to breach that. And so far, the most sophisticated program to breach all of these identity and access management solution hasn't been able to breach it. It's called Pegasus. It's a program that is run out of Israel,
Real.
they breached every identity and access management except for the digital certificate solution that we provide. So
They're gunning for you. They're coming after you. You know that.
I know. So can you just bleep out the whole Pegasus thing, okay? So that they don't put us on their top of the hit list.
All right.
But it is a solution that cannot be hacked. It's quantum computing resistant and all of that.
I was just going to say, I was just going to ask you about quantum. I mean, because that is the next, that is the other thing that's been talked about quite a bit, is the ability for quantum computers to.
At today's rate, it would take 140 years to crack the encryption algorithm that is on the device. And if the power should, the computing power should double, all we would do is, increase the bit strength. Right now it's 512, go to 1024, and then it'll take them, a trillion years to crack it, right? And so every time there's, they increase in processing power, we increase the bit and the hash and it'll just keep getting longer and longer and longer.
Got it. All right, Jen. Listen, I want to talk about the chart. I'm going to have to move your logo.
Okay.
Because the chart is reflecting what you have just been telling everybody, right? And it just makes me so happy to see this. And I think this is the beginning of some pretty exciting times for you. Mm-hmm. I think there's probably also some really good opportunities out there in terms of acquisition. I think that you kind of hit on one of the ones that I was thinking about, which is artificial intelligence, deep machine learning, all that stuff, right? There's some real opportunities there for WYY, and you're talking about a company that's got some pretty sizable contracts, right? I mean,
yes. We got the Navy Spiral 4, which is a $2.7 billion contract. We're going after the NASA SOUP SCWP contract, which is a $60 billion contract. And so, just getting a small piece of those two contracts. And of course, our DHS contract, the DHS has been announced, and that's based upon our calculation. It's going to go from a $500 million to probably $1.5 billion. Right now, the contract is worth $754 million. And so they're going to extend the 5-year period to a 10-year period. So you just have to multiply the contract value, current contract value, by 2. That's $1.5 billion contract. I think we have the inside track to win that as well, right? So Lots of good things happening, and I think that this is an opportunity. It's a great opportunity for anybody, to come in. And we have a 9.3 million shares that are out there,
Okay,
and
so
I
let's
think
talk
people are
about that.
holding on.
Fully diluted, we're
Yeah,
at 9.3 million shares.
correct.
All right. That's not a big float.
No,
That's
no,
not a lot of
absolutely.
shares outstanding.
Yeah, the
That's not even
insiders
the float.
insiders own like 15%.
Okay, yeah. So that's not even the float. That's the shares outstanding.
That's correct.
Right?
Yes.
Okay. Now, here's where it gets really super exciting. So if we look at the chart and go back to what was this? This was 2020, right about 2020. You had the nice spike.
Yeah, 2020 is when we got the DHS contract.
Yeah,
Yeah,
the second time, right?
that's
The
correct.
renewal,
That's
right?
correct.
Okay, which was a $500 million, right?
That's right.
Big spike, and then 2020 was the year that what? COVID hit,
COVID. Yeah.
right? So big spike and then big fall,
Right.
and you know what just is crazy is that it just kept falling. Which, I mean, I was watching it and I'm thinking to myself, there's no way it's not going to go any lower because they've got the contract. This is a
Right.
done deal,
Right.
secured, and they're going after commercial business that they're on a good path here, right?
Yeah.
Way
Yeah.
better than they were. No debt, solid, right?
Yeah.
I was wrong. It kept going lower, right? Okay.
Uh-huh.
But here we are today, and this is where it gets so exciting. So if you look at the chart, the long-term trend is going from the upper left
Hmm.
to the lower right,
Right.
right? I mean, that's where it is going. I got to move
Right.
this thing over so you guys can see it.
Over the
Uh,
last 4 years. Yeah.
yeah, so that when you've got a long-term trend, that is where the momentum is, right? So to break that trend, you have to have something that has more power, I guess,
Yeah. 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 A
than
catalyst to, yeah.
right.
Yeah.
Well, when you break a long-term trend, that is meaningful because you have now broken that momentum and you have started what could be the momentum of a new trend, which
Yeah.
is from the lower left to the upper right,
Upper right. Yeah.
right?
Yeah.
And if you look at what the stock has done, and this is where we are right now, right? So you built this base after you fell and you broke levels that I did not think you were going to break.
Me
You
too.
built this base at about a buck 65, right around in that area, sideways. And that to me is like a launching platform, right? The wider the base, the higher the space. So you built a nice base sideways for quite a while.
Uh-huh.
And now what happened? You came up here and you tested this, let's call it the $3 area, which is an area of resistance. Round numbers are psychological for people.
Right.
Breaking above them is like a meaningful thing, right?
Uh-huh.
So you came up to 3 and it found some resistance, and then you pulled back, and then you just smashed right through it, right?
Yeah.
What's really nice about the chart and the way it's acting now is you are stair stepping higher. You're putting in a higher low. You didn't go down after you went up here and tested, 350. You came
Uh-huh.
down, you tested the area of support, and then
Hmm.
you bounce back up. So you didn't go down and make a new low. So you put in a higher low, then you came up here. The big spot, the big spot
Uh-huh.
is the $4 level. That is where you have, and we can go all the way back to like
Uh-huh.
2017,
Yeah.
where you
Yeah.
see 4 acted as support for a long time, right? So there is a lot of memory at 4. So you pop through it, you've pulled back, And you've broken the long-term trend. You've started a new trend. You're stair stepping higher.
Yep.
And now you are working on getting to not just cash flow positive, but
Earnings per share. Yeah, positive.
right.
Yeah. Yeah.
And you've got potential new contracts that could be awarded.
Yeah.
You are in a very good, it appears to be a
Yeah.
very good position,
Yeah.
right?
Spiral 4, Soup 6, the DHS 3.0. There's a and the census, the next decennial census, the our proposal team is gearing up for that because it starts right around 2025, right? And so we're gonna win that one too.
How big of a contract was the census?
That census was probably like in the total dollar amount was probably $80 million per year kind of thing.
And
And so
you
it's for like a year plus a couple months on the one end, a couple months on the other end. Yeah.
handled the census through a pandemic.
Through a pandemic, the largest mobile management solution, management project, bar none. Something like almost 700,000, mobile devices, cleaning them, providing the logistics, putting all the software on it, imaging them, rolling it out, configuring it all for the users. And then once they were done, we had to bring them all back, reverse logistics, wipe them all, recycle them into inventory, sell them to the secondary market, all of that stuff without losing a single device, without having it hacked, without, compromising any of the functionality. We did all of that during a pandemic, right? So we can do it again. We can do it again. I don't want to do it through the pandemic, but we
No,
can do it again.
but I would think that they would be inclined to stick with the company that
Yeah, that's
good
a
care of them.
past performance, proven past
Yeah,
performance, right?
right.
And so, I think we have a, very good chance of winning it again. And we intend to win it, right? And so we got all of these things happening right now. We got all of these contracts. So our organic growth strategy, we're executing. And so now that all of that is happening nicely, now it's time to look at inorganic growth as well. And as we mentioned earlier, I think there's a lot of opportunities there. Essentially, I'm exposing or I'm leaning on our network of, our senior managers, our executive management team have a lot of contacts in the industry with CEOs of, either competing or sort of supplemental or complementary technology. And these are the folks that we're looking at and private companies, and they're out there and profitable companies. And so we're looking for those companies that's going to be immediately accretive, and that's going to just, take us to the next level, stair stepping up, just like our stock price.
Are you having fun?
I am having fun. I mean,
You know
it's
what?
always good to have good news.
I haven't seen you this animated and this excited in a while,
Yeah,
right?
yeah, yeah.
I
Uh,
can feel your energy right now,
yeah.
right?
I mean, it's all throughout the organization. I mean, we've gone through some tough times, right? I mean, we had a lot of cost cutting measures and things that have happened, but that I think not only do the executive management team feel this way, it's pervasive throughout the organization.
Then were you a buyer of your stock, or are you a buyer of your stock?
Yes, I am a buyer of our stock, and now we are in the open window, and that's a good question. So please look for the Form Force.
All right.
Uh,
Listen, I'm not telling anybody what to do. I don't tell people.
yeah, I bought stock in the first quarter. I bought stock in the second quarter. I'm a collector. I believe in our company, and we're going to do great.
And you know what? And you deserve to do great, Jen. And I hope that yeah, your day is coming, man. Your day in the sun is coming. I really believe
Yeah,
that. Not just you, but I mean the entire team.
yeah,
The company has been overlooked and underappreciated, I think, for far too long. And things are starting to hum on.
yeah,
All the
yeah,
cylinders are firing, and things are starting to turn, and people are going to
yeah,
wake up
yeah.
the company.
Yeah,
And
well, as soon as we turn, earnings per share positive and show meaningful, net income, we had people come to us looking to, acquire us as well. I mean, it's, and they're just kind of kicking the tires at that point. But, I'm sure that there's going to be a lot of interest.
Dude, you're not going to sell too cheap, are you?
Of course not. I mean, I'm my cost basis is probably around $8-9. So, we're not selling for, cheap. Believe me. I mean, I think we're worth a lot more than that.
Uh, and I agree. I
Yeah.
agree. Jen, I want to thank you so much for taking the time to give us an update. When do you think we should have a follow-up?
I would say we should follow up right after our third quarter Q3 call. How's that?
Okay, that sounds like a plan. And that is, what do you know we're in your report?
Probably November about probably the 14th or so.
Okay, November 14th. All right.
Yeah.
I'll
So
mark my
I will, send you an email, when I find out the exact date. We have to have the board meeting and all of that and,
okay.
and build up to that. But I'll give you a calendar when that is.
And Jim, it was a absolute pleasure to talk to you. I appreciate you coming in, and I think this is a story that I'm not, like I said, I'm not telling anybody to buy the stock. I would suggest that here, though, at these levels, anywhere between here and $3. Interesting candle recently where it tried to pierce below 3. Somebody tried to flush the stock,
Yeah.
but as I've said a million times, it isn't a matter of where the stock travels in the day. What matters is where it closes. And even though somebody put in a pretty good attempt to try and take it, they failed. And at the end of the day, it closed higher in the upper portion of the candle. I would look for the next big break to be over, if it takes out 4 and it closes strongly above 4,
Mm-hmm.
4 then becomes your next floor.
Support. Okay.
Right? Yep. And
Yeah.
the chart looks beautiful. The story sounds fantastic. And look, if you're not in it, this could be a very interesting spot to start adding a position. Take a look,
average in, that's
average in, right. Don't go all in. Just average in. That's all.
Average in. Yeah.
Or at the very least, go to WYY's investor relations site and sign up for their email alerts so that you can follow the story. And just don't let this one slip through the cracks. That's all I'm suggesting. Right?
That's
all right,
right.
Tim,
That's right.
thanks, man.
Tim, thank you very much for having me on. I really appreciate it as always.
All right, you bet. Hold on one second. I'm going to shut this off. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Jen Kang from Widepoint Corporation, ticker symbol WYY. I hope you enjoyed today's interview, and if you did, please do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.